Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. With all the turmoil in the markets and everything going on, what's the answer? Well, today you're going to meet an investor and entrepreneur with decades of experience who will share lots of golden nuggets and make the case that capitalism can fight back. Get ready to take some notes today on the Real Estate Guys radio program.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. Joining me in the co-host seat, it's our financial strategist, Russell Gray.
Hey, Robert.
This is one of those times where we wish we could do more shows because there is so much going on, and we certainly have other content and avenues, and I know you and I get asked to speak at a lot of places, and we've been on the news, and everyone wants to know what's happening. And today we're going to make the case that capitalism can fight back in terms of all the craziness that's going on. A couple weeks back, we had George Gammon on the show, and we were talking about the bank implosions and just safety and security of funds and FDIC and all those questions. And I think that an investor today, whether a real estate investor or not, has probably more concerns than they have in a long, long time.
Well, when you think about what's been going on, obviously there was the COVID crisis, the lockdowns, and back then we convened a panel of experts and we discussed what they thought they saw coming. One of the things I love best about being the co-host of the show and the relationships that we built is when something breaks in the news, which is usually a reflection of something that broke in the economy or in the financial system, we have the opportunity to pick up the phone and call really smart people and have a conversation about it. And so I think a lot of folks felt like, hey, the worst is over now, and we weathered the storm and the world is opening back up and life is getting back to normal. But what we're discovering is there's some latent issues hidden inside the system. Federal Reserve's been raising interest rates, and we've been talking about the ramifications of that on this program for quite some time. And the question is always, what's going to break and what's that going to look like? Now we're starting to see things like the breakdown in the banking system, which is really a direct byproduct of what's happening in the bond market. We are seeing some real stress in commercial real estate, major companies defaulting, and you're realizing, okay, maybe we're not through the woods yet. Now, again, this isn't doom and gloom, because the flip side of every problem, every challenge is an opportunity. And you can make the argument, the bigger the problem, the bigger the opportunity. In fact, as we kicked off with this concept that capitalism fights back, problems in the banking system actually have been apparent for a while. And if you're into that world and you know what you're looking at, you can recognize it. And then it begs the question, well, if somebody made you the banking god for a day and you could reinvent the banking system, what would that look like? Well, we just happen to know a guy who actually took that approach, and he's qualified to have an opinion. It's not his first rodeo, and we're going to be talking about that today, and I couldn't be more excited about it.
Our guest has made several appearances over the years on the Real Estate Guys radio program, normally talking about mining and energy and those kinds of things. He is a self-avowed speculator and the chief investor and CEO of Rule Investment Media. And we've run into Rick Rule over the years at conferences and so forth, and he always does a great job of relating his topic to our audience when we have him on the show. But we learned at our last meeting with him in November that he and a good friend of his, another gentleman who's been on our show before, are in the process of opening a brand new bank. And you think, wow, this is a really interesting time to open a brand new bank. So we thought we'd talk to Rick about not only what they're doing and why, because there is a void that they're looking to fill, but also He will give you some great nuggets about how you can prudently examine a bank and what questions to ask and what research and due diligence to do if you're at all worried about these things. Rick became a millionaire in his early 20s, but lost all that money early on and came back, and today is nearly a billionaire. He's a super great guy. When we come back, we'll meet our good friend Rick Rule today on the Real Estate Guys radio program.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Hear ye, hear ye. Registration is open for the Real Estate Guys 21st Annual Investor Summit, a mansion spending an entire week with like-minded investors, world-class educators, and real-world professionals. Returning this year is the editor of the Gold newsletter, Brian London, real estate developers Beth Clifford and Victor Monash, and Jim Rohn's 18-year business partner, Kyle Wilson. Also back from Peak Prosperity, Dr. Chris Martinson, and the rebel capitalist George Gammon. And joining us live and in person for his 11th Investor Summit, Ken McElroy. Plus 2 brand new faculty members we can't even mention yet. It all begins June 6th in beautiful Ambergris Caye, Belize. Visit Summit on Sand to get all the details and reserve your spot. This transformational week is like no conference you've ever attended. Go to summitonsand.com and make plans to spend a week with the Real Estate Guys, George Gammon, Ken McElroy, and an all-star faculty on the 21st Annual Investors Summit on Sand.
Hey, ever wished you could go back in time and do some tax planning? Now you can, just like Marty McFly. Lucky for you, a brand new federal law just made this possible with an EQRP to get tax deductions and reduce your taxable income from last year, so you can use that tax savings to invest in real estate, Bitcoin, gold, even your own business. Whether you're a full-time investor, doctor, government employee, even if you have 5 or 50 employees, the EQRP works and is your secret weapon, and now it's retroactive. Hey, I'm Damian Lupo, and we have your solution. By the way, if you got bad advice and used an IRA for an apartment syndication, you are sitting on a U-bit time bomb. But don't worry, there's a solution, the EQRP. The EQRP company is ready to help you get control of your money, kill U-bit, and help you pay way less taxes. Want to learn more about this strategy? Send an email to eqrp@realestateguysradio.com for my special EQRP report. Paying tax or letting Wall Street suck you dry is dumb. Your first step is freeing your retirement money by sending an email to eqrp@realestateguysradio.com today.
Hi, this is Mark Skousen, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program, now in our 27th year of broadcast. There's always something to talk about, and let's face it, you can't be an investor and not be a little concerned today with everything going on. We've been talking the last few weeks about instability in the banks and interest rates and the dollar and all those fun things. As a real estate investor, before you're a real estate investor, you're an investor, and you got to understand the economic climate that we're in. So we thought we'd reach out to a gentleman who's been on the show a couple times before, talking specifically about an area of investing that he has a ton of knowledge in, but he also happens to be in the formation stages of a brand new bank and cannot wait to talk to him about that. Please welcome back to the Real Estate Guys radio program, Mr. Rick Rule. Hey, Rick.
Pleasure to be on with you. Wonderful times to be talking about real estate investing, to be talking about precious metals, and a wonderful, wonderful time to be talking about banking. So I look forward to the discussion.
Well, and obviously you have a big background in mining, and we'll get to some of that because the folks that haven't heard you before are, I'm sure, going to get some nuggets there. But, you know, on everyone's mind are these bank failures, what the FDIC is doing to step up. When we last saw you at the New Orleans Investment Conference, you and Frank Trotter were discussing this new initiative to start a bank. And as soon as we saw these banks failing, we thought, well, okay, then here's a guy we got to talk to. So tell us, first of all, prior to what we heard with Silicon Valley Bank and the others, why was it a good idea to be thinking about starting a bank right now?
This will be my 7th deep involvement with a small bank. So I've been involved in the banking business for about 35 years, to the extent that I occasionally introduce myself on podcasts like this as a used money salesman.
Yeah.
Banking is a very good business, and I have lending really in my bones, so I enjoy banking. I backed Frank Trotter beginning in 1998 in a prior bank that he did called Everbank,
right,
which was extremely successful. It was one of the nation's first online banks. It went from a startup on my living room floor where we first did the spreadsheets to $28 billion in assets under management at New York Stock Exchange listing, and ultimately a buyout by TIAA CREF. So I guess the first thing to know about this is that I'm backing a very good team that I have backed before. The lending business, the spread lending business, is a very good business. At its heart, what you do is you aggregate savings and deposits from various people who don't have the time and inclination to on-lend it themselves, paying them a reasonable rate of interest rate, unless you're a great big bank, in which case you pay them nothing, and mobilizing that capital for the benefit of primarily investors, very often real estate guys.
Right.
People who, as an example, need help with a first mortgage for a single family residence, or need financing help for other capital intensive parts of the real estate business, like rental residential or other types of things. And, for most of my life, I've been involved in banks that were, to be fair, principally real estate lenders. So there's an awful lot of synergy between what I talk about and what your audience talks about. When I say banking is a good business, understand that it's a highly leveraged business. And there's lots of things that can go wrong if you let them go wrong. The first thing that people tend to do is they employ too much leverage, something that you'll know about from the real estate business. The FDIC considers a bank with a 7% equity slice, which is to say 7% equity as against total assets, to be well capitalized. Real estate investors I know might quarrel with that 7 number. And in my declining years, I actually believe that 10 is a better number than 7.
Yeah.
Your listeners who are either borrowers, and by the way, it's important to know about bank solvency. If you're relying on the bank for capitalization, you want to have a relationship with a solvent lender so that you can continue to do business with them. So people who are doing business either as a borrower or a depositor can request from their bank something called a statement of financial condition. It's worth doing. If you rely on the FDIC for the safekeeping of your funds, think about relying on any branch of government for security, and think again whether you or not you think that's a good idea. But anyway, Let's get back to the statement of financial condition, what you look for. The first thing is that you look for a bank that has money in it, a decent equity slice, not an over-leveraged bank. The second thing that you look for, I think, is the gross credit spread. In other words, are these guys efficient bankers? Are they paying reasonable rates of return to their borrowers? In other words, will they be able to continue to be funded? And are they making reasonable money on lending that to borrowers? Look too, and this is a little deeper, at the relationship between their provision for loan losses historically and their actual loan losses. Beware of banks that are under-reserving for loan losses. These guys are manipulating earnings and manipulating assets the wrong way. And this is a warning sign. Look, too, for time spreads. Beware of banks like Silicon Valley Bank that have lent for the long term, but have funded it with overnight or very short-term deposits. This mismatch between the timing of assets and liabilities is precisely what precipitated the savings and loan crisis, a banking crisis that some of your older real estate investors will remember, and I think probably not fondly.
Right.
So be very careful about time spreads. And look, too, to liquidity. One of Silicon Valley Bank's problems was simple liquidity. The bank didn't have enough cash or near cash assets to handle the now and demand deposits that they had. There was a mismatch between their ability to fund redemptions and the redemptions that they saw. This is all basic banking, but every safeguard that you take as a banker reduces a little bit your return on equity. It is important that bankers focus first at return of equity before they worry about return on equity. And a relationship, particularly that a real estate investor has with their bank, both in terms of continued access to capital, but also as a repository of their savings and their liquidity, requires that real estate investors begin to use some of the acumen, some of the techniques that they take in analyzing their real estate investments, and apply those same lessons to studying their banking relationships.
Love that. Well, and of course, we always know about the FDIC in the United States and how there's kind of a backstop there. And we saw in Silicon Valley Bank that it was more of a backstop than originally attended. And so all these folks today are making this decision. Do I stay with my awesome local bank that I know well and has provided capital for me and takes good care of my money, but isn't too large to fail? Or do I consider moving my money to one of these more guarded, larger institutions? I'm sure you have a perspective there.
I think if you're a very small retail depositor, you go with the national banks. If you're a more sophisticated depositor and borrower, you look to a local bank that you have a relationship with, where you have studied the bank as a business. It's important to note that if the banking crisis gets worse, what you need to understand is that the capital available to the FDIC relative to the mark-to-market losses that are experienced by banks of all size, but particularly big banks, is insufficient.
Right.
I'm not suggesting that we are going to have an epic run on the banks in the 1920s or 1930s circumstance. But it does need to be said that the mark-to-market losses that, in particular, the big banks enjoy, if that's the right phrase, in their longer-dated assets is substantially larger than their equity and also substantially larger than the current ability of the FDIC to handle that loss. As a consequence of that, I think it's incumbent on investors to look beyond the protection afforded by the FDIC and come to understand something about the bank that you are doing business with. This is just absolutely common sense. It's important to note, too, that the very, very, very large banks, perhaps as a consequence of the in-migration of deposits, pay very little interest. It is common, I would suggest, that many of your readers have fairly high checking account balances because of the investing that they do or because of their lifestyle. And it's probable that if they bank in one of the 5 large financial supermarkets in the United States, that they are receiving no interest on their checking accounts. When we had EverBank up and running, we had one product, a high yield deposit account that you could use it as a saving account and you could write checks against it. The average balance that we had on those deposits in the old days was $78,000. And I know numerous people who are fairly high net worth investors that maintain, because they need to, checking account balances over $100,000 and receive no interest. This is a subsidy from those depositors to the big banks who, frankly, don't need it.
Well, and of course, you mentioned this idea of being a spread bank where you're able to pay depositors at one rate and then loan the money out on things like real estate at a different rate. And you want your bank to be profitable. I think that's part of the message. It's not just I want the highest return, but the nimble bank has a better ability, I'm guessing, because they aren't placing as much money and they can get to know the investment better in a place where they can make a healthier spread. Is that the case?
I think that's a very good point. I'm a fairly large shareholder of a very small bank called the Bank of Hemet in Southern California. The Bank of Hemet only has 60 or 65 serial borrowers, which is to say most of the business, most of the lending business that the bank does with a fairly small group of fairly sophisticated borrowers. That bank wins by providing superior service. This is not an advertisement for that bank, by the way, by providing superior service to professional and semi-professional real estate investors in 13 Western states. It is impossible for the Bank of Hemet to compete with Wells Fargo or Bank of America. It is similarly impossible for the Bank of America or Wells Fargo to compete with the Bank of Hemet. The Bank of Hemet can approve a loan for a borrower they know within 5 business days. The big banks frequently take between 60 and 80. In a transactional business, like real estate, a competitive business, time is of the essence. So it's very important that sophisticated bank customers do business with a bank they know. There's nothing that says that you can't be a great customer of Chase or a great customer of Bank of America. But if you are that, you have to have a relationship with a banker at that bank who knows you and will defend your interest in the institution. If you don't have that, frankly, you can't afford to do business with a financial supermarket, in my opinion.
Most real estate is the perfect target for these smaller banks, and it's why, unless you're, buying 400 or 500 units and you're going to get an agency loan, that local banks can make a lot of sense. But typically you also find they specialize. They know a market or submarket pretty well. Let's talk about this new bank you're forming and what kind of the target is there, where it fits into the puzzle. I know a lot of folks are interested in what you're doing, not just because of your success record, because you're a prudent guy, and Frank's amazing. We've had him on the show back in the Everbank days. But tell us about Battle Bank. What's the concept there?
Well, Frank's a good old-fashioned Midwestern lender. He believes that banking should be about blocking and tackling. He goes about banking the way Ohio State used to go about football, which I like. Nothing flashy, 4 yards in a cloud of dust, but if you have 4 downs to make 10 yards and you're averaging 4 yards a carry, you're going to do pretty well. And that's what Frank has done for the 35 years that I've known him. We like to regard Battle Bank as a community bank, but a community that isn't defined geographically, that's defined by interest. And I think a couple things will set us apart. One, simplicity. I went into a branch of a financial supermarket about five weeks ago and discovered that my branch had 14 savings products. My branch manager, a very nice young woman, didn't know very much about any of them. She pointed me to a white service phone, which I guess connected me to India or something, to learn about these savings products. I learned to my chagrin that 5 of these 14 savings products offered me no interest. Battle Bank will have one savings product, a high-yield savings product that you can write checks against, use as a savings account, whatever you want. There's no need for 14. We'll have one.
Yeah.
A 70-year-old depositor like me prefers 1 to 14, particularly when 5 of the 14 don't pay me any interest.
Right.
Our bank won't try to be all things to all people. Our market at Everbank was for aspirational people who wanted a bit more out of a bank. So as an example, there are over 500,000 people in the United States who believe in precious metals, and they own precious metals in segregated accounts. We will lend against precious metals held in segregated accounts. If you have a couple $100,000 worth of gold, but you need to access some liquidity, let's say to buy a duplex, we will use that gold as collateral and we will lend you the money on a revolving basis. You don't have to draw it all down at once if you don't want to. You have access to the cash. No other bank that I'm aware of does that. If you want control over your own IRA, let's say that you don't think that your IRA should be invested in mutual funds. Let's say that you would like your IRA to do hard money lending or to own a duplex or a triplex or a fourplex. We can set up a perfectly legal IRA for you, which owns an LLC under it, and you can own owner-operated real estate in your IRA. And believe me, if you're sophisticated enough and aspirational enough to want to do that, we'd like to talk to you about providing the first mortgage. We are delighted, frankly, that the big banks in the country, I guess for so-called ESG reasons, are moving out of lending to the mining and oil and gas business. Those are businesses that I grew up in. They're very good credits. It never occurred to me that I could ever be competitive as an oil and gas lender again against the financial supermarkets. But the financial supermarkets are leaving that business. Robert, even an old fat 70-year-old like me could win the 100-yard dash if I'm the only guy that shows up to run. So what Battle Bank proposes to do is service communities that we know well, communities of aspirational people that are focused on prudently growing their net worth in businesses that they understand. This bank, like Everbank, will allow you to own certificates of deposits or maintain possibly checking and savings accounts in currencies other than the US dollar. Let's say you're a Canadian real estate investor and you operate in the United States, but for reasons of your own, either import-export reasons or other reasons, you want to operate part of your American operation in Canadian dollars. We'll do that for you. You're a first-generation immigrant from Hong Kong, and you maintain family and business operations in both countries, and you want to maintain some of your liquidity in the U.S. market in Hong Kong dollars. We'll do that for you. So look to Battle Bank as being a community bank where the community is national and is defined by interest rather than by geography.
Our listeners can probably tell why we're excited to have you on the program. Our guest is Rick Rule. We're talking about banking and the changing face of banking. When we come back, we'll also delve into some of the areas that Rick knows well from the investor point of view. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Hey, it's Robert Helms. Thanks so much for listening to the show today. I want to personally invite you to come see an amazing real estate market that combines excellent cash flow, offshore diversification, and what we affectionately call lifestyle investing. Come join me from May 5th through 8th in the beautiful country of Belize. The Real Estate Guys have been bringing investors to Belize for more than 18 years now, and our discovery trip is designed to show you the market like nobody else can. Sure, Belize is breathtakingly beautiful, the people are wonderful, and wait till you taste the food. But the real opportunity is the real estate investment potential. There's all types of opportunity in Belize when it comes to real estate investing, including both long-term and short-term rentals, commercial and retail triple net properties, business opportunities, land acquisition, development, agriculture, and more. And as the only country in Latin America with English as its official language, it's easy to understand the law. Property rights are strong, and contracts are in English. And in Ambergris Caye, a unique situation exists where demand for rentals continues to outstrip supply, creating a compelling environment for investors. So come see for yourself. Join me May 5th through 8th in Ambergris Caye, Belize, as we study the market, learn about sustainable drivers, and tour lots of beautiful real estate. And like all of our field trips, there are no properties for sale during the weekend. Rather, you'll meet lots of local providers that will help educate you about the market so you can follow up with them after the trip if the market is interesting to you. You've heard about Belize and the Real Estate Guys for all these years. Now come see what all the excitement is about. Plus, we'll have lots of time over meals and activities to talk about all things real estate. To get the details, go to the website at realestateguysradio.com and click on Events, where you'll find the Belize Discovery Trip. Once you register, you'll get information about our group hotel rates as well as travel details. So join me in Belize, May 5th through 8th. It's a beautiful country with lots of amazing possibilities, and the only thing missing is you. Go to realestateguysradio.com under Events, and I look forward to seeing you in beautiful Belize.
Hey everybody, it's Jay Papazan, co-author of The One Thing, and you're listening to The Real Estate Guys.
And welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. If you ever wanted to do bigger deals using other people's money, well then come on out to the Secrets of Successful Syndication. We do it twice a year. The next one happens in early October in Dallas, Texas. Whether you want to passively invest in bigger deals with stronger teams and better returns, or you've already deployed your own capital and lending ability and you want to go bigger, faster using other people's money, go to realestateguysradio.com under Events and check out the Secrets of Successful Syndication. We're talking today with Rick Rule, an amazing gentleman with tons of experience. Specifically, we've been talking about banking. There's a lot more to cover with Rick, but hopefully you've already got a couple of pages of notes. Before we get back to that interview, it's time to play Real Estate Trivia. That's your chance to win a prize by knowing the answer to today's trivia question, which has something to do with real estate. As soon as you hear the question and think you know the answer, send your best guess to trivia@realestateguysradio.com. You'll need to include your name, the answer to the question, and your physical mailing address, because if you get the right answer first, we're going to send you an awesome book called Persistence, Pivots, and Game Changers, a collection of excellent stories that you'll find inspiring, including one from our very own Russell Gray. Last week we had CPA and best-selling author Tom Wheelwright on the program, so we had to ask a tax real estate question. Here it is. How many U.S. states do not have state income tax? Well, the answer is 9. Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, the state of Washington, and Wyoming. That's one way to cut your tax bill legally. Just move to a state that doesn't charge state income tax. Here's our real estate trivia question for this week. We're talking about banking. Which country has the biggest banks? And specifically what I'm asking is, of the top 50 banks in the world by total assets and market capitalization, which country has the most? Yeah, you take the top 50 banks by market cap in the world. One country has more of those 50 than any other country. Which country is that? If you think you know or just want to guess, send your best guess to trivia@realestateguysradio.com. Give us your name, your mailing address, and the answer to the question. First person that gets it right gets persistence, pivots, and game changers. That's today's real estate trivia question. We're talking today about banking and what you need to know going forward as the world changes. Our guest is Rick Rule, and if you've heard Rick on our show before, we weren't probably talking about banking. Rick, you have been for years and years one of the preeminent guys when it comes to metals and mining and oil and gas and all of the things that we pull out of the ground. And I always love your presentations, the panels you host about that. We'll talk about some of the events that you'll be hosting before we're done. But take us through why now is a time to consider investing not just in precious metals, but in these earlier stage opportunities in the metals market.
Well, I would suggest that the real theme around non-precious metals, extractive industries, things like the copper business, things like the oil business, are very similar to the reason why people would invest in real estate. First of all, they're tangible. They're not ephemeral assets. They're real things.
Yep.
But they're also real things whose increase in value is predicated on population growth, prosperity growth, and the ascent of humankind. Rents go up in real estate because a local community is doing well and demand overwhelms supply. And we're seeing the same thing, I would suggest, in natural resources. There are 8 billion people, 8 billion of us on Earth. And we've done a remarkable job in the last 40 years of raising the material living standards of humankind around the world, not just the urbanization of China, but really, truly around the world. Many of your listeners will be surprised to know that even today, 1 billion people on Earth have no primary access to electricity.
Right.
2 billion people on Earth have either unaffordable or intermittent access to electricity. Robert, those people want to live like you and I. When poor people get more money, and we've done a great job moving billions of people out of dire poverty, when poor people get more money, the things that give them benefit, that give them utility for their money, are material. When you get more money, you buy a service or you buy some little gadget from Apple that'll shine your shoes and comb your hair or something like that. But it doesn't have much material in it. When poor people get more money, they increase their calorie count. They get electrification in their home. Maybe they get a Toyota Hilux pickup truck. And that's all about what natural resources are about. The electrification of the world requires copper. The electrification of the world requires batteries. So lithium, cobalt, all those materials. For 3 decades, society has been underinvesting in the means of production around natural resources, underinvesting in exploration, underinvesting in development. With no economic growth at all in the world, we will experience broad-based material shortfalls in as little as 5 years in oil, in gas, in copper, in nickel, in agricultural fertilizers. The only thing that derails this is a global synchronized deep recession or depression. You could reduce supply, which is inevitable, if you reduce demand and you don't increase prices. My own belief is that a recession only delays the inevitable with regards to natural resources, in the same way that rising interest rates only delay price appreciation in high-quality real estate. They don't foreclose it. They don't eliminate it. They delay the increase in rents and the increase in value. Your listeners will understand this intrinsically. It is the growth in population and the growth in prosperity that underpins the case for natural resources and underpins the case for real estate investment. It's the same process, a slightly different industry. What is unique about natural resource industries is that the wonderful job that we have done over the last 40 years in building standing inventory in real estate of all kinds, the home construction, the apartment construction, the commercial construction, the office construction, has not taken place in natural resources. We have a catch-up to do. In particular, we have a catch-up to do in emerging and frontier markets, where we're doing a wonderful job as a species in increasing the material living standards of literally billions of people on Earth.
Now, Rick, this is a huge, huge topic. And coming up in a few months, you've got a big conference, an event that's going to take place live and in person. So if anyone is interested around not just investing in gold and silver, but understanding mining and non-precious mining, as Rick's talked about, as well as the precious metals and where that's going and the difference between senior miners and junior miners and all that, this is a great resource. Tell us about your symposium.
Well, thank you for the opportunity. I think this will be the 30th year for this symposium, although my memory may be failing, but let's talk about it. First of all, we will bring you the real gurus, the big picture thinkers, but not the kind of guys that you'd get on CNBC or NBC. People like James Rickards, former policy guy for the CIA, by the way, internal counsel for long-term capital management. He's seen a financial blow up from the inside.
Yeah.
People like Bill Bonner, the founder of Agora, who is literally educated, millions and millions and millions of people in a way that they wouldn't see on mainstream media. We'll have, too, the best analysts and portfolio managers in natural resources. So if you agree with the worldview that comes down from our gurus, people will tell you how, where the rubber meets the road, to invest in the kind of vehicles that will allow you to take advantage of the economy as opposed to being taken advantage of by the economy. More importantly, though, every year we will have 5 or 6 entrepreneurs who we call the living legends, who have built multi-billion-dollar natural resource companies from scratch. And they'll tell you why the lessons that they learned building these multi-billion-dollar companies have made them better investors, and give you tips based on real-world experience, how you can be a better natural resource investor too. Another thing that's useful, every conference, as you know, has exhibitors. At our conference, the qualification to be an exhibitor is not merely a check that cashes. You have to be owned in the accounts of the senior speakers and myself. That doesn't guarantee, sadly, that every stock I buy goes up, but it does guarantee that I know the exhibitors well enough that I've invested in them personally. Finally, every investment product, every investor education product offered by Rule Investment Media for the last 30 years has come with an ironclad money-back guarantee. If you come to the Boca Raton Symposium this July, or buy any other Rule Investment Media product, if you don't think that you got your money's worth, email me and I'll give you your money back. No questions asked. We have had over 30 years, we've had to refund less than 0.2% of all the tuition charges that we've raised over the last 30 years. So I'm highly confident that if you attend this year's event, you will feel like you got more than your money's worth. But if you didn't, the risk is mine. Money back guarantee, ironclad.
What I love about it is that you've got the big picture thinkers talking about where we are in the economy and the reasons behind. And then you've got the practical boots on the ground folks. You have geologists that come and speak. I mean, it's a tremendous way to learn a ton. If you're brand new to this type of investing, this would be a great event. Although I will say some of it will be over your head. That's okay, right? Bite off more than you can chew and chew like crazy. But then just the conversations that you can get in, it's a very positive social event. You've got people that are new to investing, but you've got a lot of seasoned folks. So a great opportunity for that. It takes place in Boca Raton, Florida, July 23rd to 27th. We'll give you a chance to get all the details to that in just a second. Plus, you've got a virtual event coming up, which is mind-blowing to me. It's called the Electric and Battery Metals Virtual Bootcamp. That's pretty specific, and yet it's certainly an area everyone has been aware of, just the batteries it takes for electric vehicles and all that. Give us a snapshot of the reason to have a one-day on that topic.
4 times a year, we do very, very in-depth, 8.5 hour long virtual seminars in very narrow topics. Our first one was around uranium, a very narrow, pardon the pun, explosive topic. We moved on from that to a silver boot camp, and by popular demand, because our topics are always chosen by our audience, this time we're doing battery and electric metals boot camp. We consider the fastest growing part of the natural resources landscape to be that part of the landscape that's around the electrification of the world and the energy transition in this economy. Whether it be distributed storage, which is a fancy way of saying battery, or primary transmission, or in fact, electricity generation. We think that the most important theme around natural resources worldwide is energy. And the most important sub-theme with regards to energy is the electrification of the world. And so we're doing a one-day boot camp about that, about electric energy, about generation, about batteries, the whole panoply of technologies around energy and the raw materials that go into that new transition economy.
Great stuff. All right, if you're interested in that, which is a virtual event, or the live in-person event in Boca Raton, or getting on the list to become a potential customer for Battle Bank, we'll tell you how to do that with one email before we're done. So we appreciate that, Rick. Hey, in our final moments, you've been through a lot of cycles and seasons as an investor. Where we're sitting now, there's uncertainty, but there's likely opportunity. What do you have to say to folks that maybe haven't been through a down cycle before? And what are you paying attention to these days?
Be cautious right now. Build liquidity, but also build your education. Build your confidence. A crisis, as the Chinese are fond of saying, hides an opportunity. I remember myself in my early stages as a real estate investor. The real estate market crash of 1981 and 1982 brought down prices in some markets, in particular markets that I was interested in, by 50%. Because I was liquid, I had the cash and the courage to take advantage of that circumstance, not to be taken advantage of that circumstance. I didn't get shaken out of my inventory. I was able to expand my inventory. The same thing happened to me in 2008. It's important that people who go into times like this maintain liquidity, maintain solvency, but also maintain courage. When your competitors are terrified, it's the time when you can win. If you go into the situation underarmed, which is to say illiquid, you're the one who is terrified, and somebody else takes advantage of your distress. It really is up to your listeners whether they take advantage of the circumstance we're coming into or whether they're taken advantage of. That's partly liquidity, but it's frankly mostly education and attitude.
Which is why we appreciate how much you contribute to the world when it comes to education and all kinds of things. Rick, so great to see you. Thanks for spending time with us today.
Always a pleasure, gentlemen. I look forward to being back on.
There's Rick Rule. We'll tell you how you can learn more about Battle Bank and Rick's upcoming events when we get back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
As I speak, inflation is robbing you at a rate north of 10%. Last year, the number one zip code that Mid-South homebuyers offered income property to Real Estate Guys listeners in appreciated by 21%. To harness that spread and protect and grow your wealth in the current economic storm, you need the 2 decades of experience in renovation and management that Mid-South homebuyers brings to their investors. Every home Mid-South offers you will have brand new components, a new 30-year roof, and a high-quality renter, all in a price range under $150,000. Their empathetic property managers will use your ROI as their North Star, while the lack of repairs on their totally renovated properties contributes to their almost 4-year average renter stay and 99% occupancy rate. Learn about their lifetime occupancy guarantee and total 1-year maintenance guarantee by emailing midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com. You'll be glad you did.
Self-storage is an asset class that has stood the test of time. Going into the Great Recession of 2008, self-storage had the least negative impact of any of its commercial real estate peers, and it had explosive growth coming out of that time during the recovery. Fast forward to 2020, and you'll see that same pattern during some of the worst part of the pandemic. Hi, my name is Dave Zook, founder and CEO of The Real Asset Investor. Our operating partners are some of the best in the business, and we've had great success over the last decade buying mom-and-pop operated self-storage facilities and taking them to the next level by forcing value through increasing the square footage, adding climate-controlled units, bringing in our professional management teams, and turning the project into an institutional target. We have self-storage investment opportunities available for accredited investors who are interested in investing in this space for cash flow, tax impact, and huge equity appreciation. Reach out to us today at selfstorage@realestateguysradio.com.
Real Estate Guys listeners, are you tired of losing real estate deals due to financing issues? Have you had enough of waiting on banks, lenders, and investor groups to fund new projects? What if there were a way to eliminate all the hassle and invest in real estate on your own terms? I'm here to tell you there is. Patrick Donahoe here from Paradigm Life. I'm an Investopedia Top 100 Most Influential Financial Advisor, and I recently wrote a best-selling book about the financial strategy that changed my entire investment model, and the one that could change yours. To get a copy of my book for free and learn how you can maximize your real estate portfolio by acting as your own bank, send an email to mybank@realestateguysradio.com. Don't make another real estate deal without reading my book first. Email mybank@realestateguysradio.com now to get your copy for free.
Hi there, this is Danielle DiMartino Booth, author of Fed Up, an insider's take on why the Federal Reserve is bad for America, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Hey, if you're not yet registered for the 21st Annual Investor Summit on Sand, it's time to get off your butt and get it done. Just a few spots remain. It's going to be an extraordinary week plus in beautiful Belize with incredible faculty, awesome investors, and lots of sunshine. Get all the details at summitonsand.com. That's summitonsand.com. Well, my goodness, I always learn something every time I'm around the amazing Rick Rule.
Yeah, Rick's a really smart guy. You can tell he's been around for quite a bit. I think he revealed his age. I think he's about 70 years old. Been on panels with him a couple of times, most recently at the Vancouver Resource Investment Conference. Of course, we see him every year at the New Orleans Investment Conference. He's a fixture there. What I love about him, not just is how articulate he is, but he's really got a great sense of humor.
Yeah.
And he rolls with the punches pretty well. You know, he's been through a lot of up and down markets. And to your point, he's lost money. I know how that feels and has come back. But I think the thing that you learn from going through the good times and the bad times and having been around the block, you know, when you're 70 years old, you've seen quite a bit. When your dad was around, we used to comment on how he'd been investing across 7 different decades. And you just learn to roll with the punches a little bit. You realize that even when it seems like the world is falling apart, the world is going to go on. Humans are going to rise. We're going to figure it out. The transitions can be messy, but they can also be very profitable. We talk about that all the time. 11 years ago, after 2008, we shifted our focus. We started hanging around people like Rick Rule for a reason. And when you look at someone who knows how to look at something as fundamental to safety and security in your financial life as the banking system, and can begin to open your eyes to how to evaluate that, it's not just good enough to have FDIC insurance. In fact, when you look at it, the FDIC is woefully undercapitalized for its ability to underwrite all of the risks that are in the banking system. When you purchase an insurance policy, for example, there's no guarantee. And so most prudent buyers of insurance actually look at the ratings and they evaluate the financial strength of the company that they are investing in to pay off in case something happens to them. I'm talking specifically life insurance companies, but people don't look at their banks that way. So I think that was great insight that he gave us into how to look at the financial condition of a bank and ask yourself, does this make sense? And of course, the other thing is realizing that as the banks consolidate power and they all kind of collapse into that too big to fail, there's going to be a demographic left behind. And people like us, for example, that own real assets. And he talks about making loans against gold holdings. That's rare to find in the marketplace. It's hard to find people that do it. Yeah, you could make the argument it's one of the safest loans you could make. We talk in our syndication program to guys, hey, why don't you raise a debt fund and loan against gold? I mean, that's pretty darn safe. So to see that they're looking at the marketplace and seeing an underserved demographic, to see a banking business model that's got some flaws and can be fixed to create a better bank that meets the needs of Main Street people, it's really great to see how an experienced, seasoned investor, a capitalist, can come into the marketplace and take advantage of what looks like a problem and turn it into an opportunity.
So if you're interested in getting on the list to learn more about Battle Bank when it launches, and or you'd like information on the two events that Rick spoke of, coming up right away is the Electric and Battery Metals Virtual Boot Camp. That's coming up at the end of April, so you got to move fast. The Rule Symposium on Natural Resource Investing is in July in Boca Raton, Florida. All that information at your fingertips if you'll send one email to rule@realestateguysradio.com. That's Rule, like Rick Rule, RULE @realestateguysradio.com. Hey, if you haven't got your spot reserved for the 21st Annual Investor Summit, you need to do that. Spaces are filling up quickly. We've got an incredible faculty. We've got awesome folks coming. Of all times in the history of Earth to want to be in this room, now is probably the best time we've ever seen.
1,000%. We're going to have Kenny McElroy coming on the show here shortly, and I mentioned at the top of the show some of the issues in commercial real estate. Obviously, a big part of that is in the multifamily space, and that's Kenny's playground. He's had great success, and we talk about a lot how Ken had tremendous success coming through 2008 because of his ability to look at what was going on in the market, position himself, not to be victimized by it, but to take advantage of it. So I'm really looking forward to hearing what he has to say on the show. And I'm also really looking forward to spending time with him in Belize as he gets more intimate with our summiteers, and we can have deep down conversations about what he sees coming in the multifamily space and where the opportunities are going to be.
One of the smartest people we know will be making his 6th appearance at an investor summit, Dr. Chris Martenson from Peak Prosperity. As soon as Chris says yes to the summit, I know we're good. I know I can stick him on any panel about any topic and he'll make a meaningful contribution. But I'm super excited just at where we are in the economy and the way that he looks at the 3 E's, which include energy. We're going to spend a lot of time talking about energy because it is critical to everything. There's so many awesome conversations that are going to be had. Plus, we're going to have just an amazing time. Awesome food, cool people in the sunshine, palm trees, white sand, all the good stuff. Get your ticket now. Just go to summitonsand.com. That's summitonsand.com. And we'll see you at the 21st Annual Investor Summit. Big thanks to Rick Rule for sharing his big brain with us today. Next week on the program, we've got an awesome show. We'll continue with some incredible guests in the coming weeks. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and rich dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.